Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 5th, 2025, and we're diving into EyePoint's latest earnings report for the fourth quarter and full year of 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. EyePoint is a clinical-stage biopharmaceutical company focused on developing innovative therapeutics for serious retinal diseases. Their lead product, DURAVYU, is making significant strides in clinical trials, and I'm excited to discuss their financial performance and strategic developments.
Revenue and profitability overview. Let's start with the financials. EyePoint reported total net revenue of $11.6 million for the fourth quarter, down from $14 million in the same period last year. John, what are the key factors behind this decline?
The decrease in revenue is primarily due to lower recognition of deferred revenue from the license of YUTIQ product rights. Despite this, EyePoint's net product revenue saw a slight increase to $0.8 million. However, the company faced a significant net loss of $41.4 million, or 64 cents per share, largely driven by increased operating expenses related to their ongoing Phase 3 trials for DURAVYU.
That's quite a substantial increase in operating expenses. Can you elaborate on that?
Absolutely. Operating expenses rose to $56.8 million, up from $30.4 million in the prior year period. This was mainly due to the costs associated with the Phase 3 clinical trials for DURAVYU, as well as increased personnel-related expenses, including non-cash stock-based compensation.
Clinical trials and strategic developments. Moving on to EyePoint's strategic developments, the company has been making significant progress with its clinical trials. John, can you tell us more about the DURAVYU trials?
EyePoint's DURAVYU is currently in Phase 3 trials for wet AMD, with both the Lugano and Lucia trials exceeding enrollment expectations. The Lugano trial is over 50% enrolled, and both trials are on track for completion in the second half of 2025. Additionally, the Phase 2 Verona trial for DME met its primary and secondary endpoints, showcasing DURAVYU's potential as a blockbuster drug.
That's impressive progress. How is EyePoint positioned financially to support these developments?
EyePoint is in a strong financial position with $371 million in cash and investments as of December 31, 2024. This provides them with a cash runway into 2027, beyond the expected top-line data for DURAVYU in 2026. The company has no plans to access the equity capital markets in 2025, which is a positive sign of financial stability.
EPS forecast and analyst expectations. Let's discuss the earnings per share. Analysts had forecasted an EPS of 41 cents, but EyePoint reported an actual EPS of 64 cents. John, what does this discrepancy indicate?
The actual EPS of -64 was below the forecasted 41 cent, missing expectations by 23 cents. This miss can be attributed to the higher-than-expected operating expenses, particularly those related to the clinical trials and increased personnel costs. It's a reminder of the financial challenges that come with advancing multiple clinical programs simultaneously.
How might this impact investor sentiment?
While the EPS miss is a concern, the company's strong cash position and promising clinical trial results may help mitigate negative sentiment. Investors will likely focus on the long-term potential of DURAVYU and EyePoint's strategic execution in the coming quarters.
Key takeaways. As we wrap up, EyePoint's financial performance for 2024 shows both challenges and opportunities. Despite a net loss of $130.9 million for the year, the company is well-positioned with a strong cash position and promising clinical developments. John, any final thoughts on EyePoint's investment prospects?
EyePoint's focus on advancing DURAVYU in major retinal disease markets is promising. While the financials reflect the costs of these developments, the potential for DURAVYU to become a blockbuster drug could offer significant returns for investors. The company's strategic execution and financial stability make it a compelling watch for long-term growth.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on EyePoint's performance in the comments below.